We've been talking about the history of money, but what's going on right now, today? We have to talk about it. Stay tuned and find out. Hello, welcome to the Wealth Transfer. My name is Terry Saka. I am the Chief Strategist. And I know for those that were with us last few weeks with Dr. Charles Vance, he will be back to continue some of the history of money with us. He had to go back to West Virginia. We're now in our Northwestern studio, which is really nice. You can only imagine. We are moving a lot of operations here. We really believe this is a nice safe haven for what's coming in the future. But know that Dr. Charles Vance will be back from time to time. We really appreciate him. Of course, he's the one that kind of got me into this in the first place, right? But this is a unique few weeks here because something happened in the markets, and we want to show you what really is current that you're not probably getting in the mainstream finances. The mainstream media is designed to keep you engaged in euphoria, keep you engaged in the quarterly return on investment. This is the newest this, and here's what's going on now. But we're here to show the bigger picture of what really is going on. So before I get into this, and I wanted to do this for the next few weeks because there is a lot of information, not just in housing and interest and what's going on globally in the markets, that I think needs to be done now. We really don't want to wait. So before we get into that, how can you get a hold of us? Please go to cornerstoneassetmetals.com. If you're looking to do any silver purchases, if you want to get in or have questions about IRAs or 401ks, go to wealthtransferministries.org if you're looking to just keep updated with the ministry. You can also go to Cornerstone Asset Metals Facebook page, as well as Terry Saka AAMS for Twitter. Twitter is good. It's political, I know. I'm not a fan of Twitter, but it is good to put out bullets of news information. And if you are, I would encourage you to go there and like us and get those. Also, Instagram. Instagram's been wonderful. The handle on Instagram is Cornerstone Asset, or correction, the handle on Instagram is Cornerstone Mint. So go to Cornerstone Mint on Instagram. We have great 1-minute videos there as well as some great pictures. It's just a good way to stay connected with a group, and we've been growing there, so you can catch us there as well. But before we get going anymore, we are going to jump right into data or what's happening right now, and right now is the key part. So what I mean by right now, I know what's really going on but you notice the pyramid behind me. The pyramid is for a reason. We have entered into, right now, the longest economic expansion and bull market in U.S. history. So much so, there are those saying this is the longest economic expansion going back to 2600 BC, when the quarries and the rock cutters and different people that were making profits had decades of economic expansion building the pyramids. I thought that was just a really kick twist. But don't underestimate the importance of the expansion, the duration of the expansion. Folks, when they go through the printing cycles, I'm not going to show some charts here that will help clarify that, but when they go into this printing cycle and credit loosening cycle, they can only do it for so long, and then it just causes a fire internally in the financial world, and they have to cut back. And of course, that's what brings on the massive recessions. In 2008, we had a massive economic collapse that we call the Great Recession because they just couldn't pull it back. Since we have had the last collapse in 2008, we have added 150 trillion in new debt globally and 15 trillion in new printed currencies globally. That's a staggering number. Now, in that time frame, since 2008, we've had an economic expansion. And they're saying that this now is the longest expansion. And with that being said, anytime you get closer to the longest in history statement, you may want to be ready to shift, to diversify, to hedge away from, because eventually it's coming down for its correction because we're already past all known numbers. So keep that in perspective. But the stock market itself, and this is the S&P, this is the stocks, this is where your 401k is, this is where your IRA is. This is where most of us have our wealth and our savings. So we do focus on IRAs a lot and not 401ks because we work very hard in America and long hours, but they're all mostly going into these retirement accounts, these IRAs and such. And we focus there because there is where you need to be diversified. And I don't mean in paper. Your broker will have you diversified in mutual funds, but that's not quite the same. Here we have the question. The U.S. national debt has increased by $3 million. Right now, it increases $3 million every minute. Now, for most of us, it just goes right over our head. We're not concerned about the $3 million. It doesn't mean anything to us. So big deal. But it is an extraordinary burn rate of debt added that we just can't afford. So the question is, why are we printing so much money? We have printed, as I said, well, now that was globally. In the United States, our Federal Reserve has gone somewhere $4 trillion in the hole. We have added additional trillions worth of swap line, credit line loans. You don't have to get into the details of, just know we basically have printed a lot of money. Why was that? The system was busted in 2008. And in order to move, in order for the world to move, we needed to print fake money out of nowhere to stimulate the economy in order to get the thing rolling again. Now, we think that's okay, or we really don't pay much attention to it, but the bottom line is it directly impacts we the people's ability to buy and sell. It impacts our buying power. What is buying power? Nothing more than, what is this dollar getting you? Remember, it wasn't too long ago, this $1 used to get you a whole loaf of bread, a gallon of gas, right, back to 9/11. And today, here we are, it's $4 a loaf of bread and $4 a gallon of gas on average, depending where you're at. What does it buy you? And that's the important thing here, because over time, as they're printing and printing and printing, what is it buying us? Goods and services, roofs for our home, everything is becoming more expensive. Now, they try to say healthcare is more expensive because it's just medical, and they come up with all these excuses. But the main reason, folks, pure and simple inflation. They don't tell you. The inflation measure they show you on mainstream media, oh, inflation is 1.8% or 2% or whatever they're trying to tell you, it absolutely is false. They are selectively taking products out of that equation in the economic model and putting in the products that help them. If they did as they did back in the 90s, when in the 90s they put all goods and service in the equation and gave you a true inflation number. Today they're not doing that. Today they're selective. So your buying power in inflation is being eroded, and your inflation is destroying your ability to save for the future and to have retirement. The reason wealth transfer exists, the reason it came to television, was the passion behind the scenes to get the information to the people, we the people in the kingdom of Jesus Christ, to get properly protected financially and to preserve our wealth with what's coming in the future. It's important to be properly diversified. It's important to have a hard, tangible asset with what's coming, because paper isn't really relevant, because in the end, if it hits the fan, the paper burns. They can easily just walk away from it, default from it, but hard, tangible assets, you cannot. So it's important, if anything, to be educated, and being educated is a good place to get started. So I encourage you, here's some information, take this down and get started.
Buying power. What does it mean to you and your family? Have you noticed the prices of everything we buy are rising? Goods and services are becoming more expensive, and the money you work so hard for buys less and less and less. If you saved $250,000 in cash in the 1960s, that cash today would be worth approximately the same, $250,000. Yet does it have the same buying power today? No, not even close. Now take that same $250,000 from the 60s saved in silver instead of cash. Today, it would be worth a staggering $4.25 million. Now that's buying power. Protect and preserve your buying power now by rolling over a portion of your IRA into a silver IRA. Use the power of constitutional money silver to protect your standard of living in retirement and maintain the quality of life you are hoping for. The paper dollar you are saving has tremendous challenges ahead, so don't delay. Call Cornerstone Asset Metals now at 888-747-3309. Don't give away your hard-earned savings any longer. Be diversified. Get protected today.
Welcome back. So all of this printing money and currencies, what has it led to? Now, we talk about the United States, but remember, the United States pretty much bailed out the world in 2008. Now, the mainstream media didn't talk about this. On the wealth transfer we showed a few years ago, what and how they did it. We actually showed a graph where the money went, and it was some $10 trillion in loans and swap line loans that we did for people around the world. A big chunk of that went to Europe, by the way, and went to Germany. So when you watch TV and you're watching mainstream news and you're watching the media, financial media, I encourage you to limit it, because a major chunk of it is completely false. They take a subject and they narrate it towards the globalist vision, the socialist vision, the capture, the slave mentality of we the people. And what I mean by that is this. The IMF alone, International Monetary Fund, who kind of supposedly dictates direction and guidance of what's going on in the Western financials, they said that the debt is the highest ever amount of debt globally, warns the IMF. We have reached 150 plus trillion in debt, and it doesn't end well. No different than what goes up comes down scenario. We've exploded so exponentially, the world has diluted their buying power. And this is across the board. It's not just Argentina who's having trouble. Venezuela who's having trouble. You know, they're flat out socialists, so obviously they're in trouble from that point of view. But this debt will tax everyone. And the reason the trade wars took place is because President Trump knew that the dollar's hegemony, which was global dominance and authority, was coming to an end. The Russians and the Chinese have systematically, over the last 10 years, put together coalitions and relationships to undermine the very dollar. And they do that through trade. Now, how they would do it with trade. Let's say Germany wants to buy a pair of eyeglasses from Japan. Germany would have to go and buy an American dollar. Japan would buy an American dollar, and then they would do the trade. Now they're using the euro, or they could. But the point was the dollar was the center of the universe. Countries would have to get the dollar first, then they do the trade, and then the goods would ship. Today, countries, especially with China, are bypassing the very authority of the dollar as what we would call a center peg, meaning everyone had to go through the dollar, so the dollar was the pegged currency. Hence the word you've heard probably multiple times, world reserve currency. The United States is the reserve currency of the world. And we're going to get into that too, by the way. And when you'd be surprised that we're closer to the end of that cycle. But the reserve currency gave us the authority where this was the peg of everything. Now, what did that do? When the dollar became the peg and everybody needed a dollar, especially with the petrodollar and the oil, it made our demand for dollars high. And then, of course, we could print, we could issue bonds, and then through that, we were able to issue debt and expand, and print money and expend and do programs that we just don't have money for and just keep going. But unfortunately, there's, as you would say, the pay the piper kind of scenario. You can't go into debt forever. And the world is starting to bypass the dollar. They're starting to do agreements with each other without the dollar. And that is a big deal. Because if the dollar diminishes in the demand side, our standard of living is going to get crushed. I contend, and when we get into the history of money more in the future, and we show you what China's up to, once China depegs from the dollar, wait until you see where that goes. We have trillions upon trillions in the float around this world. And as the demand starts dropping for the dollar and the SWIFT code that we use starts changing, I'm telling you folks, it's a whole nother universe. So keep that in perspective. Now, when I say why it would change, if we printed all of these trillions of dollars, right now we're in hegemony, meaning we're authority. We kind of run the world's finances. But with China and the BRIC nations and others, they are starting to go away from the dollar. Germany just called for the SWIFT to be redone so it's a global system, not counting on the dollar. Now think about that, folks. Without the SWIFT, and what is the SWIFT? The SWIFT is an interbank transfer system. So a bank in Germany wants to buy goods from Japan, the bank in Japan, how they actually transfer the money. That's known as a SWIFT transfer. The United States controls the SWIFT code and the whole SWIFT system. So if there's a bank or financial institution around the world that doesn't play along with the United States, we'll just cut you off of the Swiss. And the best example of that, and the reason I'm going to expand on it a little bit, is because the SWIFT controls the financial system globally. We in the United States have controlled the SWIFT. But since the dollar had started losing its authority, per se, you got Germany now calling to get out of the SWIFT. Now, what happened back when President Obama issued directives with Iran? There's sanctions on Iran, so if you were a company or a bank and you did business with Iran, you would be fined. Well, there was a French bank who was doing business with Iran, and the Obama administration said, okay, here's what we're going to do. You either stop doing this, or we're going to fine you billions of dollars or kick you out of the SWIFT. Now, what is that? That's tyrannical, boot on your head blackmail, right? But that's, you know, what America's authority is right now around the world. So this French bank had to pay billions in a fine to the U.S. Treasury to get over this violation, sanction violation. And then what did we do? Right after that happened, Obama goes and does this insane nuclear deal with Iran, and everyone was able to do business again. Can you imagine how mad that French bank was? This is what we're getting at, is the world is getting really tired of our authority and our hegemony, and they're moving away from it. But if we lose that SWIFT, and we lose the ability to dominate with our dollar, our standard of living, folks, our future wealth is in jeopardy. And so going forward is vital where we put our savings and where and how we diversify our retirement account. Let's go, before we jump into the actual charting and details, let me go this far. Think of this. If you want to double your money, think about doubling your money. Isn't that the goal of most things, doubling your money? If you want to double your money, in the stock market today, now that we are at the longest economic expansion in history, back to the 2600 BC, the Dow Jones in the stock market would have to go to 50,000 to double your money. We're not even at the highs for the year yet, so I doubt we're going to see that anytime soon. You can invest in gold, but gold would have to go to $2,600, and it has never been there. Doesn't mean it can't, but it has never been there yet. So it's not as likely. But silver has to just go to $30, $32, and you will have doubled your money. And silver has been at that price more than a dozen times in the last 10 years. So what's more likely? So what I'm really saying is being diversified is key. Hedging in the market system. Now, your brokers don't like this, but you have to have teeth in this. It's your money. It's your future. It's the kingdom's money. And God says to be a good steward, so keep that in perspective. And when he says be a good steward, be a good manager, Doing so means getting educated and being prepared. And here's some good information about getting prepared.
Terrorism, a volatile stock market, rising food costs, natural disasters. Every day our economy is at risk, but your assets should not be. Cornerstone Asset Metals is here to help you protect and preserve what you have worked so hard to gain. Whether you have IRAs to protect, 401ks to preserve, or cash in the bank, our accredited asset management specialists are here to support you. Call now and we'll send you urgent information regarding changes to the dollar and challenges to our economy that you need to be prepared for. Learn how easy it is to roll over your current IRA or 401k into a physical precious metals IRA. We can even arrange to have your precious metals stored in a private vault or send it directly to your home. Do not delay. Call 888-747-3309 or register online at cornerstoneassetmetals.com today. Invest in precious metals and create security in your future today. Call now.
Welcome back. So I want to get right into some of the visuals so you can kind of help visualize this. Now, as we were talking about the greatest expansion back to Egypt, really, and I laugh at that because, you know, it just shows that we printed globally so many trillions of dollars that we've been able to expand the bull market in the stock market and the economy for the longest we've ever had in history. But here's the problem. It's fake. Now, some of the companies are real, some of the growth is real, but I'm saying the expansion in itself was fueled by fake dollars. They're not backed up by anything. They've diluted it. Now, think of this in dilution. You fill up your kitchen sink with water and you drop a thimble full of cranberry juice in it, it's still going to be pretty clear. Now, drop the whole gallon of cranberry juice, it's probably going to be red. That's the kind of dilution they've done to this dollar. So we talk about the world's largest expansion. The United States has been the world reserve currency since roughly 1921, coming out of, the World War I. Now remember, in 1913, they assassinated the last guy who objected, and they were able to get in a permanent Federal Reserve mandate. They took over the money supply. Even though we were partially on gold standard, they started diluting right away. So then we go conveniently to World War I, right? So soon as they authorize the control of money, then they go to war. And no coincidence, I'm sure, right? But look at this chart, how this is known as the global reserves since the 1400s. And if you've noticed, on average, it's 80, 90 years of a power, a superpower, holding on to that reserve currency status. 80 years, 95 years for France, 80 years for Portugal and Netherlands. Now, the longest expansion in history was held by the Spaniards in the 1500s to 1600s. They dominated. Those are actually the very same Spanish silver and gold coins I look for in the Florida beaches with a metal detector when I go. All those crashes around there. But we, United States, are at 94 years on the reserve currency cycle. Now, we could have plus or minus a few years here. All I know is we are 15 years longer than the two shortest empires and just shy of the longest. And yet we in the United States have expanded our economy from the inception of the Federal Reserve to the point where $1 used to be $1. This is now worth 4 cents on the dollar in buying power. That's why back in the day you had penny candy. Why you would buy a house for $15,000, $20,000, and now today look what the median prices are. They keep telling you it's normal, it's inflation, we make more money. It never equates. We never make more money than what they print and take away from us and steal from us in our buying power. So the reserve status is important because we are getting near this period where, as America, we've expanded well beyond what we could do. We've gone from in the 70s, when we started this latest dollar experiment, the new dollar currency starting in the 70s, we went from being the world's largest superpower in the sense where we gave money We're the world's largest creditors. We gave money to everybody. Of course, we were bribing them to pay them off to get our way. But we were the world's largest creditor. Today, we are the world's largest debtor nation in the history of mankind. We owe more debt than any nation's ever backed up. Back in that same time frame, baby boomers were just starting to make wealth paying taxes. Today, 10,000 baby boomers are coming off of paying taxes and going on to unfunded liabilities like Medicare, Medicaid, Social Security. I mean unfunded, folks. They were supposed to set money aside for this in what you may think is a treasure box, but they did not. So every year we need to earn money through taxes to pay for these Medicare, Medicaid, Social Security stuff we don't have the money for. That has drastically changed in the last 47 years. It's pretty astonishing when you think about it. But here's like an example, the history of U.S. equity bull markets as we're kind of wrapping up the idea of this longest expanded bull market in the history of the world. Going back to, this is going back to 2009, we're up 321%. So if you were just some brilliant, physicist, when I say that, within mathematician, you got in the market at the very bottom, you would have been up 300% from the very bottom. Now, we all know that didn't take place. We know that most of us lost half of the IRA in the account in 2008. And then we didn't get back in right away because it was terrifying. By the time we did, now we made it back. Most people today can say, oh, well, I'm kind of back to where I was in 2008. Or maybe you're even a little ahead. Maybe you're 10 or 20% ahead. I hate to tell you, you're not. If you are at break even since your 2008 market collapse, or even a little ahead, I hate to be the one to tell you, this doesn't buy the same. And so even though you're at break even from 2008, the inflation on your buying power has been so eroded, your account's actually down substantially. The longest expansion bull market we had in 1932 was 57 months. Now, it wasn't in months per se, that expansion. It was more about how much return it had, which is pretty exceptional. So we're in comparison to the percentage of return, to the percentage of expansion. We're at a point, folks, right now, that's the expansion out of the Great Depression. That's how much money we've been printing and how much we've stimulated. All I'm getting at is we're coming to an end of this cycle, you see. It's ending. And wait until you see the data points for next week. We're going to go right into a litany of data and information. So until then, I encourage you to be educated and focus on diversifying yourself properly. If anything, give Cornerstone a call. They have operators standing by. They are great at educating you. On fire kingdom representatives. They're there to look after you. So until next week, God bless each and every one of you.